Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. Let's also take a look at the structure of the webinar, how it's going to happen. So first of all, let's open the presentation here and go through the structure. The first part will be previous questions. We'll examine the questions down here and we'll try to answer them on the best side. And the second part will be the dynamic questions, which are questions that I can receive and write down here. Then the third part will be more informative in terms of sharing with you some links here to find in the website and save you the trouble to find it by yourselves. And lastly, this part here is to help us emphasize analysis approach. I highly doubt that we'll use it because the questions themselves usually take us to the analysis. As you can see, there are already questions here, but we'll see if we'll have to use it at the end. Okay, so like I said, we will begin with the previous questions. Just before we hit the road, it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, I understand that sometimes we can't really get things on the first time, so it's necessary to watch the webinar again, sometimes even in a slower pace, which is completely doable through our YouTube channel. So basically, to watch the recording of this webinar, all you gotta do is just to go to the YouTube channel, to YouTube, and to search for AvaTrade. And in our channel, you're gonna find a huge library of content, which includes this webinar as well, other webinars such as analysis and all kind of things, which can be extremely useful along your journey. Okay, so the first question is, how can diversification help balance better P&L, profit and loss, right? And loss ratio. Okay, all right. We have another question here. What steps of analysis should I take before opening a position with new or existing instrument? Okay, how can shift my job to how? Oh, maybe there is missing here an I. How can I shift from my job to become a trader? Yeah, okay. What comes first, technical analysis or fundamental analysis? Naturally, fundamental analysis, but it doesn't really, or maybe, okay, we'll get to that. So let's take the first question and easily paste it in our notepad up here, and then we'll see. First of all, to understand the question, we need to understand a few things. What is diversification and what is profit and loss ratio? What we're going to do is let's fold it down and then go to this nice list we have over here. And in the list, let's go with maybe indices, and let's find something interesting to trade. Maybe Dow, or let's go with NASDAQ. I guess NASDAQ is a little more popular. So we have NASDAQ opened, as you can see, 21,885 and 25 for the buy, and for the sell, $2 less. If we're looking at the question we had here, to balance better profit and loss ratio, to design profit and loss ratio anticipated for the position, I can assist with the profit, take profit and stop loss. So I'm gonna enable 3 of them: execute when price hits, take profit and stop loss. And what I'm gonna do is I'm gonna bound the entry to a single number. Let's go 2188, maybe 0. Okay, and that the take profit, we can make it maybe a little higher, and in here we'll make it a little lower. Okay, and then we have around the same ratio. Okay, this considered a ratio of 1:1 since the, let me also write it down. Okay, this is a buy type, and we have here 0.01, right? Okay, let's maybe even take it a little higher, right? Let's make it 0.1. No, we can't do that. Let's go 0.5 like this. Okay, and $20 is very little for Nasdaq for weeks, so we might also want to extend our take profit a little higher. So let's make it like this, and let's also reduce. I'm just setting here an example to understand better diversification, because diversification is based on diversifying multiple positions with different instruments. So I'm just gonna put a few examples here, and with the examples we will understand the difference, how we can get better profit and loss. Okay, so the current price, as we notice, is 21,875. Let's write it down. And what I would like to do is I would like to subtract 1,000, which brings us that. Oh, sorry, that's for the stop loss. And oh, it didn't work. Let's again try this way. Okay, and let's also add 1,000, or maybe just add 2,000 here for the other side. Since when we are with a buy, our intention is that the value will increase, therefore, oh, it doesn't work. Usually it does, but it seems like this time, okay, 22,875. There we go. And in here, okay. And now we can naturally lower the load size again. Okay, great. So we have one position that is here. Let's take the position here. Entry will be what we design. What this order does is it simulates if we were on MT4 or MT5, a pending buy or a pending sell, depending on the reference we see here. So if it's on a buy and I ticked the box, it's going to acknowledge the buy. And if this would have been the sell, I hope you guys see the difference. In here, the blue is a little more, it's a little brighter blue, and in here it's a sell. So if I switch, I don't want to do it because it will reset the number. But if I click here, this one will become a little brighter than that, right? Okay, so the entry is what we wrote, which is this number. Let's see if we can. Yes, perfect. Then we have TP for take profit, which is that. And we have the possible profit. Okay, 1,000. And stop loss with, just a second, okay, we'll take that, equals possible loss equals 1,000. Okay, so this is one position. Let's call it A, no problem. Above that, we can put some lines just to make sure we know that this is a separated position. And what we're going to do is we will just multiply that a few times to help us achieve diversification. This doesn't look too comfortable. Now it's better. Okay, and let's also add a few more instruments to this equation. What do we have here? Apple. Apple is not opened yet. Let's make it gold instead. Gold is now 27.50, right? Oh, what did I do? It's now 27. Oh, well, what a momentum, right? Well, it was 2750, but it's not anymore. As you can see, it's moving now. This seems like a sell. Maybe quickly click here on the sell and quickly set a reasonable lot size and also set the position. This is a sell, 0.25. This time, because this is a sell, our intention is that the value will decrease, and to design the stop loss the same way as the take profit. Okay, what we're gonna do is we will take the current price. Let's also change the name to what we have now. So we have this is B, we have gold, 0.25. Entry, let's make it now. Okay, take profit will be $20. Lower, so we'll make it like this. And sorry, this one, because we are with a sell, will be the opposite. So the take profit needs to be lower and the stop loss needs to be higher. So it will look like this. Sorry, it seems like I forgot to add the zeros. Okay, and now if I'll simulate it with the platform, let's watch together. 2767. Okay, great. And we have 2747 for the take profit. Oh, that's the opposite. You see, that's what I meant. There we go. Okay. $47. I took the wrong current price. So now it's 47. It needs to be 27, and now we are good. So we have, well, because it's moving, obviously the numbers are not going to stay exactly the same. So we have to click on execute when price hits. And when we set an exact number like that, then the numbers will stand still. We have a flat, nice flat 500. Maybe we can even increase that a little bit. We're not going to have enough margin for that. So let's extend our take profit and match it with take profit with the stop loss. Okay. So now this is the new values, 2707. Okay. This is a sell. And we have to adjust the stop loss as well. And now we are good. So we have 1, 2. Let's also adjust crude oil. And in crude oil, let's make a sell. Since it's, it seems like, okay, the general trend is a sell, so I'm going to stay with my sell. 0.1 seems fine. And I believe it has another good maybe $2 down if it will break the little support we're seeing here. So it's a little on the edge, but yeah, I guess we can have it this way. If it will pass, I think it might have a chance to carry on a little lower than the previous resistance and then might consolidate. So I'm going to take the current value the same way, 75.5, place it in our third. So we have a third. Now we have crude oil. We are with, sorry, this one is a sell as well. And let's maybe keep it 0.1. Okay, no problem. This, yeah, let's keep it 0.1. Let's also change that, and we have to match the take profit to the price we targeted. So that was 72.75, and the same way $2 higher will be 77.5. Wait, let's see. The current price is, sorry, 78. 78. Okay, and now we have approximately the same ratio. Again, I'm doing it with the same ratio intentionally to explain how diversification can help, because currently, as you can see, they're all aiming for the same numbers, right? Let's maybe extend that a little bit. Okay, that makes more sense. And now we're almost looking at the same numbers. Let's extend it a little higher. We have the spread, maybe a little more because we have the spread, and now it makes sense. And at the moment, let's write down 72.75. Let's also change the entry and not forget to click on execute when price hits. So we can target a specific price and not a dynamic price. And now it sits standstill. 75.75. We didn't add any analysis to it. We're just constructing at the moment. TP is we are with a sell. That means that the take profit needs to be higher, lower, and take profit needs to be higher. Okay. I changed it like this. Yeah, it was fine. Right? 8. There we go. But it moved. Why did it move? Because now it's perfect. Okay. Let's take the take profit, 72.75. Okay, and then we have 78.75. Okay, and again, we're looking at the same ratio, this time 750. Maybe we'll round it up a little bit. Okay, maybe a little bit more. Let's make it like this. That makes more sense. And now we are looking at 1,050. I mean, I could change the take profit and stop loss to match to exactly 1,000, but I'm not even going to bother at the moment because I'm just trying to answer the question here. So we have 1,000 and 1,000. And lastly, our, what's that? That's coffee. Seems very bullish at the moment. Let's make it daily. Okay, there is no doubt that it has possibility to carry on up a little higher, maybe even $10 higher. Okay, like this. And if we zoom quickly, let's make it primary. Okay. And if we quickly just, okay. Yeah, so we can see that on the long run, coffee has done quite a way. And in the daily candles, after it passed that segment right here, it seems like, let me just quickly capture that guy here. Okay, and we are at the same exact point. Okay, we are at the resistance point. So if it breaks, I believe that it can go even higher. Okay, as you can see, I believe that it can go even higher. It started with a great momentum. Let's see what happened yesterday. Just real quick. Open 328, closed 348. Absolutely, it has a possibility for another $10. So we'll go back to our divided picture, and in this divided picture, we will we had Nasdaq here. Let's quickly fix that. Okay. And with coffee, we are intending a buy, this time with 0.1, sorry, 0.05. And let's extend the default take profit, bounty entry to 3, maybe take a little lower entry and then make it 55 as take profit. And let's also match with $10 lower. Okay, and flatten the digits and also extend take profit. And now we add the lot size, and now we have a perfect composition. So we have A, B, C, and D. Oh, sorry, A, B, C for CL. Confusing a little bit, but okay, and here will be coffee. And we are with a buy indeed. Let's make it like this. Entry price 345. Okay, no problem. Take profit is 355 and stop loss 335, right? Yeah. And now we're looking at exactly the same numbers. As you can see, all positions are aiming to the same numbers. There is no difference. This diversification is leading us to a potential growth of 4,050 and a potential loss of 4,050 with 40% exposure and 40% possible profit. So at the moment, this equals to 40 possible gain and 40 possible loss. Okay, and we would like to know how can this help us balance a better profit and loss ratio. All right, so if I would like, as an example, that my my possible loss will be, let's say, instead of 40 will be 4, right? Is an example, and then I can make 4,000 like I put here, but the stop loss will lead me to a much lower exposure. What I can do is I can play with the stop loss in each of those positions, and I can get it closer to the entry. And what happens when I do this is, let's make it, we are with a buy, let's make it $2 lower, maybe even $1 lower. Of course, this is risky, and what I'm showing you now is an extreme addition to what you can do with this. But you understand that at the moment, the ratio that I'm looking at is 1 to 10, right? Even though it can trigger in a matter of a minute, right? Maybe not a minute, but maybe a little more than that. But the point here is that this way, by playing with the stop loss closer or further to the entry, I can change my possible profit and loss. And as an addition, what else I can do is I can set a different lot size to each of those positions to customize the necessary margin impact. Okay, this is a part that you need to learn separately because I'm not going to explain about it now in our webinar. I don't want to burn all our time in one question. But the point of this scenario I wrote here is, as you can see, you have maximum flexibility to design the positions as you want, which has direct impact on the possible loss or possible gain. Of course, you need to include the margin in the calculations so you know that your account is capable of performing this kind of diversification. But yeah, I guess this pretty much convey what we wanted to achieve. So with diversification, I can better manage my profit and loss ratio based on number of scenarios to number of instruments, other, instead of course, of one scenario to one instrument, which is the point of this diversification. As you can see, it doesn't mean that I can gain more or lose more. It's not. It just gives you better, it just more scenarios here, right? That depends how you manage it, how you construct it, but at the end, that's how it goes. What steps of analysis should I take before opening a position with a new or existing instrument? Okay. This question is very, very interesting, very, very interesting. And what we're going to do is we'll go back to oil. We'll expand the chart like that. And we'll go CL, choose it from the list. It's already on the right, great. And with oil, we will go through the question here. Okay, and in this question, we see that what steps of analysis I can should I take before opening a position? Okay, before with a new or existing instrument. So of course, before I click here buy, I need to think of a few things. I've taught this method, the TTMUI, target time movements in units, in previous webinars, and you can go and watch the other webinars. But the idea is similarly to what we did here. Well, it's not here anymore. But as you can see, there was elements that with these elements I could design the position, right? And with these elements, basically, I can decide where I can find a bit better where I'm heading with this position. And I can target specific number, just like the example that I showed, and to customize it to my needs. Okay, so for instance, this time with oil, let's just take a very, very simple scenario here and go with the same numbers we had, right? Let's expand this and decrease that. Okay, and as you can see, this is one of the steps that I'm taking. I'm designing the position and I'm checking, okay, I have enough margin. Margin, just simple translation here. The value that we see here is per unit. And the number that we see here is, the reference is the lot size. So we can see that one lot equals 1,000. So 0.1 equals 100 and 0.01 equals 10. So if I'll stay with 0.1, that means that I actually acquire 100 units. Now with this 100 units, each dollar on the platform will be 100 profit or loss, right? So that means, just a second, let's make it this way. Okay, so that means at the moment we can gain or lose 100 just like shown in here. Now, the next step after I'm done composing the position is, of course, setting. At the moment, we've done this before that, but never mind. Okay, so one day maybe. The movements, we use the ATR for reference. So we have the average true range. Okay, and the units we took here is also 100. So we have $1, $1, $1 expected movement. Okay, this is one of the steps. The other step is probably to go directly into the news section and see in the news section if there is anything new regarding oil. And then I can go to commodities and then check, of course, if there is anything related to crude oil, which we have, pre-European market brief, the USD Japanese yen, rebound as dollar gains traction. And we can just read this and understand better. We can also go and check the inventories and all kind of different things. The steps before opening a position is really depending on the type of the trader that is using, that is trading, right? So what I can do is I can just maybe use a signal, or I can do analysis, just roughly on the chart as I showed you. But if I want to take it a step farther and I'm more professional, so I'm going to do all kind of preparations on my chart, and I'm going to use tools that I'm used to that can help me assess a bit better where the instrument can get to. And on top of that, it really depends on your style. So like I said, if you're a support and resistance or more technical guy, so perhaps you will begin with that, but it's not necessary. It's not a rule. It's not for everyone the same way. So I don't know really how to recommend to do it, but let's say design the position, needs, and then of course analysis, right? We have technical or okay, fundamental. Usually it's written this way, just to make a little more neat. So we have design a position to your needs, technical analysis, fundamental analysis, and lastly, okay, and of course we can also have, that means that we can partial close, or we can hedge, or we can do all kind of things that will help us make progress with the existing position if it doesn't go as we plan, and even if it does go as we plan. So this is the steps that I would recommend, just the basic steps to begin with. Of course, as I said, everybody can take it to a new horizon, depending on what they're trying to achieve, available time, capability, trading ability, and so much more. So this is really, like I said, just the idea. So we have it down here. How can I shift from my job to become a trader? Well, this is a very easy question. Of course, all I have to do is just to make as much as I make it in your job. Of course, I would recommend you to make this transaction as smooth as possible. So for instance, if I am just a second, guys. If I'm working in a physical job or whatever job I work during the week and I'm occupied during the week, of course, what I would want to do is to make a plan that will fit to my lifestyle. And this way I can trade and work at the same time, and I don't have to give up one for each other, but I can keep making consistent progress. You have the senior account manager that can assist you with it. So a strategy can be as good as it can be, but at the end of the day, it needs to fit to my lifestyle and to my personality and to my ability as well. So if it's too hard, maybe I'm not going to have consistency with it. So it's not really beneficial. So I think finding a strategy to match to what you can and want to do, and then to slowly shift. But again, there is, as I said in the disclosure in the beginning, this is just my personal opinion. Some may say you have to do it all at once. Again, I'm not, I'm not going to recommend this way or another, because that depends on the type of the person. Some people, they jump into the water. Some people, they test the water and then so it really depends. How can I? Okay, so the answer to the question is really not something that, so I'm just going to write down here that depends on the available time, sources, trading ability. Yeah, so I can't really give instructions how can you shift. At the end of the day, that depends on the money. If you can make as much as you make in your job, great, but the process itself is really so individual. I mean, somebody can make it in a month, somebody can take a year or 2 years or more. What comes first, technical or fundamental analysis? The eternal question. So of course, this is also a matter of type. I know it's a little disappointing to hear me keep saying that, but there is no exact rule. There is no exact rule. There are people, more technical people, who likes to go through the charts, add all this kind of indicators, and then to assess and follow the numbers, going even for smaller time frames and then scalping, all this kind of things. And there are people who begin with the news first, and they want to know what happened, and they go through the reports. You can find many in here in the Market Buzz. You can find a lot of information about all kind of instruments. It's presented so nicely with a bubble here. All you got to do is just to click on, let's say, Netflix, and inside of it's already divided to categories. You can just go with one, what's interesting to you. So let's say revenue increase. And in revenue increase, we have all kind of articles here, which you can click and enjoy. We can also go back and then choose another instrument if we're done with the article. So we can click here on the arrow and then choose another instrument and have even maybe Oracle, and then have another one, and you can just keep going like I showed. And if you diverse with 4 or 5 assets, just look how easy it is to maneuver between the different instruments. On top of that, if you're more into currencies and you want to get more familiar with what's happening with the economy and you need the announcements and the events, and down here you have the trading economic calendar. And in the economic calendar, you also have everything separated extremely nicely to categories and to low, medium, and high impact. Let's go with the high for now. And now I can simply focus on the exact thing that I'm following, exact thing without nothing else. Let's maybe mark let's maybe stay with the Canadian dollar for now. Okay, so as you can see, we have something today, right? It hasn't happened. How can I know that? Because you can see the actual is not presented. And when the actual is not presented, we can see that there is a red line here. See that red line here? And when there is a brighter white, the brighter white are things that hasn't happened. Behind the line, as you can see above the line, there is the actual results. You can see the results for the events, and clicking on the event, just like that as an example, is going to elaborate what the event is about. And then you can as well add it to your calendar by clicking here on the add calendar and choosing depending on the method of calendar you're using. On top of that, you have here the event chart. You can check the volatility. You can check here the price chart. And here you have the volatility as well compared to US dollar. And in here, you can check the impact. Again, change the currencies to whatever comparison you want to make. And that is just super, super comfortable. I don't know how to exactly define what comes first, guys, because to be honest, I have few screens. They're all opened at the same time, and I just move across between the chart to the news and then back. So constantly analyzing everything at once. But I would say maybe let me just break it down to words so it will be easier to understand. Technical analysis is mainly information. I'm gonna write it very, very cautiously, right? Okay, and we have okay, so you have the how things are moving, right? We saw oil, we saw Nasdaq, we saw coffee, all of those charts where we see the candles moving, the price is moving, right? So this numbers has certain meaning, right? And we can analyze them, and we can benefit from from averages, from statistics, from certain levels, support and resistance. All these things are technical things. All these things are based on past behavior to try and anticipate the future, right? But fundamental analysis is just understanding the reason. The reason. Let's go back to Netflix real quick, just so I can show you. Nothing too crazy, guys. Again, I don't want to delay about this question too much, but just to show you guys. Where is our market buzz? You see, this is Netflix. This is Netflix yesterday. Let's quickly put it like that. And as you can see, Netflix yesterday moved an incredible movement of more than $130. Let me be exact about that. Okay. As you can see, it moved $126. That is insane. In percentages to the value of the, let me quickly switch that to Netflix as well. So we can see that this is just insane. And on this type of movement, a lot of money could be made or lose, of course. And this is something that if we go back to the news, let's go back to the market buzz, we can see that Netflix here today is quite a star. Well, yesterday quite a star, but again, you guys understand the point here, right? So yeah, we can see that the news are good. The news are very interesting, and the market is reacting to that, right? For Netflix and all the blue chips companies, all the public companies, you can of course search the earnings seasons, and in the quarterly report you can enrich yourself with more information about the performances, the product, the new release, new targets, and of course what we saw, the topics can be selected, and you can specifically focus on maybe the revenue increase or whatever else, the earning announcements, whatever else you want. You can expand your research, go to Google and keep reading more. Anyway, I think that this is enough for this question. There is no specific rule, so I can just write down that depends. Okay, both analysis are necessary. Again, this is to my opinion. The order doesn't make too much difference as long as both of this analysis was done correctly before opening the position. Okay. So I'm not going to tell you what to do first, but Okay, let's make the font a little smaller and get rid of the bold. Okay, it looks fine. All right, this part, like I said, is more, this slide is more informative. Let me send it to you over chat. Like that. So this will be to expand with a little more education. This link is to log in and make a deposit. The third one that I sent is for more formal information. If you want more formal information about the account or something like that. Real account, it's self-explanatory, and the academy, which I'm going to show you how to access from the website as well. So for your convenience, let's go back to the same screen. I would like to say again that the platform I'm using here is called a AvaTrade, and the AvaTrade is something you can log in with your email and password. You don't need to install, you don't need to download. Super, really, this is what you see in the beginning. This is super simple to get to here. It's flexible, you can customize it whatever way you want. And as I was about to show you, in here at the bottom of the list, this is another segment. You see the in here, this YouTube play button, whatever you want to call it. And then in here, if I'll click on Academy, it takes me to the Academy. And if I'll click on Tutorials, let's see, it opens slowly. And we will let's go with entry orders, and in here I can click play, and directly from the website with full sound and everything I can start learning. Okay, so this is super simple, and as I have explained in the beginning of the webinar, this webinar is recorded. You can watch it again in your own pace in our YouTube channel for free, and this is just a lot of content for you to use and enjoy. And before we say goodbye, I would like to give you guys a little benefit for participating in the webinar, which is a special promotion Q&A code. And I'm going to paste it in the code for you guys to copy and paste. And then you can give it to your senior account manager. And then you can get one-on-one premium market review. I think it's very useful, so you can share your ideas with somebody else and at the same time analyze the market and educate yourself. I don't think there is anything better than that, really. So enjoy that. And that's it. This is we are done for today. I wish you all a fruitful week. I hope that you've learned at least one thing from this webinar today. Of course, you're welcome to join us next week. Until then, best of luck with trading and have a good day.